Bob Coleman. Very nice to meet you. Thanks for being here. You're going to have to unmute yourself.
Sorry about that. Can you hear me now?
Got you, Bob.
Okay,
How
sorry
are you?
about Good. How you doing?
Good. Nice to meet you. I think the timing's pretty good with the Fed coming up, so forth. Dollar really took some pressure here in the last few weeks. I want to get to the markets, Bob. Do you want to share your screen during this interview or your face?
Oh yeah. Oh, hang on a second. Just gotta make sure. I think I knocked my camera, so I don't know.
I'll show people how bad I look on a Friday.
Okay.
Guys, stick around for this, especially if you're a precious metal guy.
Okay, let me see if I can start the video. Okay, it's trying to start, but it says its host has stopped it.
The host has stopped it. Okay, let me see. Yeah. Let's see. Okay. Now I know what I have to do. Allow. Oh. I'll make it co-host. Now you'll be able to do it. So now we're co-anchors, Bob. Your first interview, all of a sudden we're partners.
Yep, that's funny.
Okay. All right. So before we get to the markets, and I went through your stream, a lot of interesting things to talk about, especially that start with the letter S, like squeeze.
Yeah.
The color of my hair. You can just call me Mr. Silver if you'd like, Bob.
Sure.
All right. Okay. So I'd love to know about your journey before you got into hard money. And, I noticed that you are involved with a company that does storage outside of the U.S. financial system in armed vaults. So what state are the vaults in?
Well, Idaho is our
Okay.
basically our home, and then we also provide storage over in Singapore through Malka Amit over there. We've actually was one of the first U.S. companies to actually start storing metals in Singapore back in 2011, I believe.
Okay.
So it's been some time, but we've been with the COVID lockdowns. Singapore to me made the most sense at the time, but with COVID lockdowns and you see the reaction from governments, it's not as appealing for U.S. investors to store overseas anymore, especially with obviously what we saw in Canada and so forth. But yeah, I had a chance. I can give you the backstory if you'd like it, and that way kind of.
That's okay. So why don't you tell us, like, when you were 18 years old, what were you doing, Bob? Collecting coins? Well, can you remember that far back?
I had a lot more hair, that's for sure.
Okay. All right. But what were you doing? Did you say, "Yo, you know what? Your father showed you the value of precious metals, maybe, and you had a mentor in your family." What was it that took you there?
Well, it's interesting. I went into college as basically an accounting. Walked away with an accounting and finance degree. Started my career basically in '92. In '93, I started with Dean Witter. I mean, we're talking way back then.
Oh my God, we had the same start.
Okay.
My first job in the industry was being a runner on the CME floor for Dean Witter.
Oh, okay. Yeah, I had a chance. We it's funny because I started training actually the month after the first World Trade Center bombing. Over at the World Trade Center when they went bringing out there. But yeah, it's something
when Bobby Axelrod was shorting airline stocks on billions.
Oh, okay, yeah.
Right.
I don't know if it was that or if it was actually the second World Trade Center bombing, but
Oh, yeah, I don't know which one he started shorting them, but
yeah.
anyway, yeah, okay,
Yeah, you get hooked on those shows, that's definitely.
yeah, yeah.
But yeah, it's something that I've always been sort of into the metals, just trying to understand money my tolerance is a little bit different, or my viewpoints. I look at risk first at everything, instead of reward. So what brought me into sort of and I grew up with the old school brokers, the old school mentality of trading, looking at Ibsen charts, the commodities brokers with the charts pasted all over the walls. And I wasn't really a big broker when it came to putting people in structured products, things like that. I was sort of I guess nowadays you'd be considered a rebel in that wire house mentality. But so I was always looking for particular ideas rather than structured vehicles. So
How do you
eventually,
like cold calling?
oh God, I was kind of known.
Come on.
I was known as the cold calling king. I literally would open a phone book up and just start calling all over the country. I mean, it's just. In fact, they brought me out there for presentations to San Francisco, and to educate some of the brokers on retirement plans and marketing and all this other kind of stuff. And I was the youngest. Actually, when Morgan Stanley took us over, I was the youngest. I guess President's Club member. At that Dean Witter ever had, I think, or something like that.
An animal.
So, yeah, you just try to, to me, it's understanding, trying to inform people, and treating them with respect. I think that's the most important thing. And I've done that my entire career.
How many dials a day when you were really at it? Come on, tell me.
Oh my God, you're talking 200 to 400 dials. I mean, it was crazy. I mean,
that's work.
But yeah. That's old school.
Yeah.
Now it's point and click, but bombard everybody with spam emails. But it's something that you always have to go through. It's smile and dial. I mean, everybody has a phrase for it. So but yeah, it takes you way back there. And I get a chance to go to the Pecos and see that I mean, the options piss there. My God, it was just crazy. In the 90s, it was just nuts.
Yeah.
But yeah, it definitely the business has changed.
There's a baton death march.
Yeah. It's a shame because you lose a lot of the personal interaction. The business that I've created, what brought me to the physical world was basically I left Morgan Stanley after Morgan Stanley Dean Witter merged in 96. I left Morgan Stanley in 98. Went independent, started my own investment advisory firm in 2001, started a hedge fund in 2001. And then, of course, 9/11 happened. The world got kind of changed there a little bit. And then basically by 2006, everything was melting up. I saw the leveraged up of the financial system. So I decided I needed to find an asset that you could hold outside the system. And I was always a sort of a gold bug in a way, and understanding money, the history of money, and so forth. And what prompted me to look at the metals was not just the idea of holding it outside the system, but removing counterparty and systemic risk. It's the only asset that I know that you can actually do it. You can't really hedge away risk, that kind of risk.
Price risk. You can't hedge that away.
Yeah, because you got too many. I mean, obviously we saw with GameStop, the idea of a potential squeeze, that would take down counterparties and clearing firms and all that kind of stuff. So, but knowing what I was what I kind of understood back then, I had to basically look at the physical metals. The problem is, as a registered investment advisor, I couldn't recommend physical metals and be paid for it. So what I ended up doing was, and I looked at all the depositories in the country at the time. I looked at all a lot of the foreign global programs. None of them met any of my conditions with regard to risk management and diversification of counterparty risk, systemic risk, conflict of interest risk, social, political risk, all those types of things. So basically, I had to open up my own depository. So I started a storage company in 2008. I kept it very simple in terms of, try to keep the limits of liability clauses and all these hold harmless agreements out of it, and really be responsible for the client's metals, and don't hide behind, catchphrases and things like that. So by 2010, our facility went live. We moved a lot of metal, or all their metal, out of Brinks and Salt Lake. We were one of the largest clients there at the time, and been here basically ever since. We've never had a client loss at the facility. Thank goodness. I have a very interesting concept. I'm the only, I believe, investment advisor that actually owns a depository. It's a full-fledged depository insured by Lloyd's of London. We do fulfillment as well. So it's, we can insure product. We have an armored vehicle that we can actually transport in. And so we can move up to $10 million in a vehicle. A lot of different things that I do that really tie into the high net worth investor. It's sort of like the Jerry Maguire, I guess, of the metals industry. Because not only that, we can buy and sell metals directly with wholesalers. So price wise, I can beat every dealer in the country in price.
How much are spreads in silver right now?
It's insane. It's right now.
I mean, a good deal is 10% over spot, isn't it?
Well, the 1,000-ounce bars, I think, are $1.05 over spot is what I have them at right now. And I mean, the problem is you're dealing with physical metal, so you're dealing with the supply constraints that we're seeing in the industry currently, and that's impacting a lot of the pricing. There's also a lot of greed. There's also a lot of sort of influence of price and so forth, or premiums, I should say. And so what I try to do is educate people. I mean, I can get silver kilo PAMP Swiss bars for $3.25 over spot for clients, and that's delivered. But it's trying to find the best product at the best price right now. This is a very difficult.
I think about this, Bob, and then I wanted to get to, you talked about there might be a force majeure, and you're also totaling up deliverable silver at the COMEX and compared to positions. But I wanted to ask you, as far as, how are people going to use 1,000-ounce bars to barter? I mean, if it comes down to it, I mean, aren't you going to need rounds, like a 1-ounce measure of silver, especially if we attain, say $60 and you need to use it? I know I'm not in the $200-300 camp in silver yet. I'm positioned for $62 silver. That's what I'm looking for. I do think we could have one more low. There's a caveat here. So what are you going to do with those? Put them on the end of a bar and do curls and bench press your 1,000-ounce bars?
Well, it depends. Obviously, you make some good points. It depends on why you're buying it, and if it's for utility or if it's for investment, if it's for store value. When you're dealing with, depending on the client size, if they're small clients and they're getting into silver for the first time, yes, coins, 1-ounce product is very popular. The issue you run into just currently is the high premiums.
You can't find them. I go to some. I'll talk to you. I buy physical. I'm going to call you for my next purchase. So you can't find U.S. silver coinage. Can you find it?
Yeah,
can you get?
You can get it, but you're going to pay up for it. That's the problem right now.
How much? How much? Like on a Buffalo rounds?
Well, if you're doing silver rounds, I'd have to take a look at it. It's probably $3.90, $4, something like that over spot, and that's probably a 4 to 6 week wait right now. That's the issue is. And
it's only going to get worse, right, Bob? Because of what you're saying.
You may, but right now you have a very interesting scenario that's playing out. You have a crossover in years in a lot of these sovereign 1-ounce coins. The U.S. Eagles, the Maple Leafs, the Philharmonics, the Austrian products, the British. They're all making now 2023 products. So some products are just like the U.S. Mint, completely off the market until January when the 2023s roll out. And then you have the issue with the the Queen dying, the British Royal Mint, as well as the Royal Canadian Mint, having to change the face of the coin to put the King's effigy on it. So you have some crossovers and some production issues that are impacting the market temporarily, and that may see more coins come onto the market after the new year. So, and that's something I've tried to help people with. I'm not a big person when it comes to sensationalism and fear mongering. I'm trying to tell people, if you want to buy silver right now, buy the best product or the best price product right now, and that may be 100-ounce bars or 1,000-ounce bars, but the coins right now are extremely expensive for this specific reason.
Okay, so let's get to the silver market and the insides, the plumbing. I noticed that you follow inventories and deliveries, and I believe the tweet I saw was there was going to be a force majeure if metal prices kept dropping. Why don't you explain to our viewers what you mean by that?
What we're seeing in the marketplace, and I started seeing this back in August, where you had CTAs and funds and so forth shorting silver. You saw it on the managed money side. You saw it on the SLV. You saw a huge short position, 60 million shares short at one point there, maybe a little bit more than 60 million. Backwardation for 3 months on silver. You saw things that weren't normal. You don't really see a backwardation in the metals for a very long, it can happen in a very short space of time, but not over a course of months. And gold actually saw a backwardation at that point too, which is really unnormal. Which was really strange.
Really unusual.
Yeah. So that basically what we started to see in August was refiners pulling metal off the COMEX. What you're seeing when metal is drawn from the registered category, that is metal being pulled by fabricators. That's the U.S. Mint buying through vendors, vendors taking delivery on behalf of the U.S. Mint, delivering the metal to Sunshine, for example, to make blanks. That is metal that's being used. It's not just for investment purposes or moving to the eligible category to be stored and then eventually re-delivered back onto the exchange at a later point in time. That there's actual demand for that metal. I mean, when you have refineries pulling metal off the exchange and shipping it to Switzerland to make product, there's tightness in the market. So you saw mining with the price dropping below 22. You started to see sourcing of metal become an issue, and that's why refiners have been going to the COMEX, because they need to lock in product. They have to make product. Their customers aren't. Yep. So whether it's Apple for the phones or GM for their cars, whatever that silver is needed for, you have to have it, and the refiners have to be able to make it. So, and then you started to see with Bloomberg put a piece out in late August with on the platinum side, how one of the major German refiners was talking about a potential force majeure with regard to platinum because they couldn't get a particular chemical to help in the refining process to make finished platinum. And then you have the energy issues that's going on with
miners.
Well, not just miners, but also the refining side in Europe. And the cost of energy rising. So it's not necessarily that they can't get the power. It's just that the cost of that power is rising. So that those input costs have to flow through the system. And so you started to see some increases in premiums due to costs by refiners having to make that metal. But like you said, South Africa is obviously running into power issues and so forth. Now what you're kind of seeing with the price dropping below 20, you're some of these primary silver producers, you're now below, with the cost of production. With oil pulling back, it helped a little bit, but being below the cost of production or right at the cost of production, that's making it more difficult, obviously, to make money. So you may see, from what I've been hearing, miners may have been rolling forward contracts to try and in the hopes that prices would maybe rise, and so that they could deliver product at a higher price, maybe a month or two down the road, rather than making that delivery in November. And so what's happening is the LBMA came out with an interesting press release a couple weeks ago, talking about how they're opening up the market to the small artisanal miners, where they would allow product to flow from those guys into the LBMA chain, sort of integrity. And that's telling me that the market is getting really tight on metal. And you're seeing it with this constant sort of tug of war with backwardation going to, to slight contango. The market then starts shorting. You see a pattern that develops when you go into backwardation. That's typically funds.
That's bullish.
It's bullish, but it's funds that are shorting the paper price down. The physical market is doing everything it can to stabilize and form a base. I mean, you have a massive amount of buying. I mean, the metal that India is buying a tremendous amount of silver. This drawdown in the not only on the COMEX, because there's metal that's leaving the COMEX that's going straight to India. There's the massive drawdown you've seen in the LBMA silver inventories. A lot of that has gone to India. I mean, they have bought an enormous amount. I mean, you're talking on an annualized rate in July, for example, that would have been about a third of the entire world's global mining supply production. I mean, it's a massive amount. So basically, when silver broke 21, 22, that's when basically India woke up to the idea of, hey, silver is a great value. And so I think as it stays below 21, 22, that will help. You'll probably see foreign support for buying for silver, especially with the dollar as strong as it's been.
I was going to ask you, Bob. I forgot who was the guy that I talked to. Anyway, he showed me a chart, and every bull market in silver was accompanied by a bear market in the dollar. Do you think that we need a bear market in the dollar for us to have a bull market in silver?
It's an interesting. We're seeing things that we've never seen before, and so I don't know.
Everything's unprecedented. Yeah,
it is, and so my thinking has always been, at some point, if the dollar continues to rise, the metals at some point are going to rise with it. And it would be a sign that the dollar is actually truly starting to lose its purchasing power. The problem is the dollar, it compares itself to all these other currencies, and everything else is basically lighting itself on fire, it seems like, when it comes to yield curve control or quantitative easing. Or
they've had bull markets in metals. If you were in yen and you bought gold, it served you pretty good.
Yes, that's
or the euro or the pound, everything but the dollar.
Yes, and our day's coming, and that's why I believe in physical metal, because it doesn't have an expiration date. You don't.
I was an option trader too.
I did a lot of that. Been there, done that.
And then they work 2 days after expiration.
Yes, exactly.
Right?
Yep.
Okay,
Yep.
Bob. We have blood on our face. Okay.
Yep. I've been there. Yep.
All right.
And that's the problem with the markets. A lot of traders, a lot of investors will use leverage. They don't understand the dynamics of how, hey, listen, gold and silver may be a great long-term inflation hedge, but there are times when it's a liquidity issue, and it's an asset that's sold for liquidity. It just happens sometimes that's an occurrence. And so I always try to tell clients, don't trade on margin. Understand your mining companies. Mining companies are not the same as the actual metal. And trying to help support, the client's thesis that, okay, what your game plan is not necessarily what's going to happen in the next 6 minutes. It's really what's going to happen in the next 6 years. Yeah. And that's critical.
Okay. So being outside the financial system, obviously people who agree with you are worried about a repeat of what happened in the 30s and confiscation of metals, correct? And this is their way of keeping things outside of the reach and have privacy and security, instead of just putting them in a coffee can and burying them in the backyard.
1933 Bank Holiday Act wasn't necessarily a confiscation. It was more of a nationalization, because people were actually compensated the par value of whatever that $20 piece was on their coin that they turned in. So it can be confusing out there, but that's basically what it was. Confiscation is just basically taking somebody's asset and not giving them any type of value in return. So it's important to kind of recognize that. And so what you have a lot of gold dealers out there talking about, which is very frustrating as a financial advisor, is they promote this idea that you got to have these pre-33 gold coins because those are going to be
Yeah.
free of confiscation or free from the Bank
Yeah.
Holiday Act 1933. But that act is no longer valid. No, there's no law in the books. Nobody knows what that's going to happen, going forward. And if you look at the premiums on some of these gold products, some of these things, are more than 15%. Just like a 1930, like a St. Gaudens or Liberty. These bullion products are through the roof on some of them, especially on the silver side. So, but I try to educate people into that. That way, they're not buying a high premium product or a product that's subjectively priced. So it's just trying to guide people so they have the best experience possible, because that's part of the issue when you're buying metals. This premium right now is, the premiums are temporary. They're not a permanent fixture. And I think the industry isn't doing the best they can to educate
No, they're
people.
in fact, I see videos all the time. We're out. I told you this day was going to come. I can't get any. There is a lot of that hype out there.
There's a lot of hype.
I wanted to bring it back. Someone asked about the country of origin for the coins. I've heard it said that, if you're in the U.S., you're better off buying U.S. Coins. Does it matter?
It doesn't really matter unless you live in a state. I mean, there's some advantages to U.S. mint coinage, especially if you live in Utah, Arizona, because it's state sales or state capital gains. Yep, state capital gains tax free. So there's advantages there, but you got to weigh the premium. You got to weigh the entire cost of the trade. So buying, these dealers selling them for $18 over spot is insanity. I mean, you're buying something that, if the U.S. Mint finds another vendor that makes blanks and they can make more blanks, you got to remember the U.S. Mint is making or producing half as many Eagles as it produced, 10 years ago. They can ramp production up. Well, the problem is the vendor. I mean, the Sunshine Mint is the primary producer of these blanks. There's a lot of question why Sunshine can only make so many blanks. And we could get it. That's a different rabbit hole altogether. But that's one of the choke points that's happening in the marketplace. The European mints have the same issues of getting blanks made for their products so they can stamp them. It's the blank makers are also private label companies, so they also make a lot of money making private label products. So they may meet the minimum requirement of the contract for making blanks for a mint, but then they may make more product on the side for themselves or for other private dealers or wholesalers. And there's big business there, because if you can actually not make enough blanks for the U.S. Mint and create a shortage for U.S. Mint product, all of a sudden those premiums rise. The U.S. Mint is sort of a litmus test for all the other products with regard to premium structure. So premium structure goes up across the board with rounds, with private label bars. So that all of a sudden the industry can make a lot more money and take advantage of a tightness in U.S. Eagle product.
Okay. Well, I'm showing your website here, Bob, and I could tell from talking to you that you're very customer centric. You care about people, and you don't like seeing them being taken advantage of in your own industry. You're kind of a watchman for, I think that before you buy some physical metals, talk to Bob. And this is where you could find him at goldsilvervault.com. And you also field questions on your Twitter account, Bob?
Yep. And we try to put out a lot of good information, actionable information. I'm not a big player when it comes to hype. Again, I want to try and help people, educate them through this journey we're all going through together. This is not, we're not. I wish I could say I know everything. I don't. I study this stuff. I took a weekend off a couple weeks ago and really looked at the ETF structure, how the ETFs actually work, learning that the ETFs, the real product of the ETF is really us. We're the product, not necessarily the ETF. It's amazing how the authorized participants use the ETFs from a arbitrage standpoint to really just scalp and make money off of people that are, trying to maybe invest in silver. And that's part of the problem that we have. And that's why the price doesn't move as much, because there's just too much paper and too many derivatives that are overlaid on top of the physical activity or the physical product itself. So, you're trading a vehicle that you think may move the market. It has absolutely very little to do with the market. It's just a representation of that price that you're really investing into. And it's important for people to understand, especially high net worth investors, because a lot of, when we come back to 1,000-ounce bars. If you're a high net worth investor, for example, and you have, let's say you have 100,000, you want to buy in silver. Do you buy something with, a 50% premium, or do you try to initially go into something with a 10% or 5% premium, something that's more manageable to give you a chance of making some money in this thing? I mean, it's because as the price rises, like you said, I think you're spot on. 65 it makes a lot of sense. 62 makes a lot of sense. But when that price goes past 35, there's a lot of people that bought in 2010, 11, 12, 13. That's overhead supply that's going to start selling. They've been sitting on this stuff for a long time, and that's going to come onto the market. That's going to hit the premium structure. It may not affect the price, but it may hit the premium structure. And that's something that people want to be aware of, instead of listening to the mantra of the dealers today. You got to buy it because you're not going to be able to get it. The train's leaving the station. I hate that type of that mentality, because it puts people into a frenzy, and then it's like an option. The day after that finally makes its move after expiration. And that's, I don't want to see people go through that with this, because the metals are a special investment at a given time. It's not always a great time to be in metals, but in this type of situation with high debts, and basically we have to inflate our way out of this mess. Now you have to really look at not just return on your money, but return of your money. And that's, I think, what I try to promote.
Okay, Bob Coleman, you're now my new trading warrior brother.
Sure, I appreciate it. I've followed your work for a long time, so big fan.
Well, great to have you, Bob, and really great explanations on what's happening in the physical market, and great advice with your demeanor for people not to have any FOMO by the hype. Just like any other investment, do your due diligence and find someone you could trust and believe in.
Definitely. There's a lot of good dealers out there, and I want to promote the industry. I just don't want to see people get hurt.
Okay. All right. Well, here's to a silver lining in the clouds for silver investors. And this is coming from Mr. Silver. It's finally time for my hair to be more valuable than ever. All right. Anyway, buddy, great talking to you. A great way to cap off the week. Pleasure meeting you, Bob.
Definitely. Thank you again. I appreciate it.
All right, everyone. So that's a wrap, everyone. People are saying thank you, Bob. And I'm not sure if the rest of the team's here. Anyway, check Bob out at thegoldsilvervault.com and call him if you have questions before you commit 10, 20, 30,000. Go ahead.
Yeah, Bob. And we also have on our website, if you want to scroll, there's at the top of the menu, there's a pricing page that we put some product pricing on. Just on the upper right-hand corner there. It says buy price. Yeah, right there. That'll give you some pricing of product. We try to update that every day. I try to put out product that's worthwhile for the client to take a look at. I'm not going to put Silver Eagles at $18 over spot. To me, I can get it a lot cheaper than that. Maybe the problem is the wholesale side of the business. They're charging $12, $13, $14 a coin right now. So but it's to me, just try to find the best value that you can. That's the most you can ask for right now in this period, as we wait for new production of metal to come out over the next couple months.
Do you think platinum could catch up to gold? I'm an old timer. I remember when it was trading at a premium to gold.
Yep. Yeah. We've been seeing a lot of buying of platinum lately. In fact, and we can get, we can take delivery off the COMEX with the platinum plates, I guess you call it.
Okay.
But yeah, it's and the 1,000-ounce silver bars too. We're taking metal via through the wholesaler right off the COMEX. They're breaking receipts and taking delivery. So there's ways to impact and have a positive impact on the market. And because to me, it's all about price discovery, and price discovery, I think, is through the physical world, not necessarily through the paper world. But platinum, yeah, I think you're seeing professionals starting to come into the market, especially with this idea that the electric vehicle is going to not really have the impact or not be able to have the mass production that it may have because of the battery issues. Hydrogen fuel cell and that type of thing, that's something that is starting to catch people's eyes a little bit. If that starts to wake up later this decade, that could have a huge impact. So,
well, as my trading warrior brother David Morgan says, the white stuff goes first.
Yeah.
Right? Okay. Thank you, Bob.
Thank you.
All right. Thank you, F.A.C.E. See you guys. Have a good weekend. Hope we added value to what you're trying to accomplish. And remember, don't just count your coins, count your blessings. Adios. See you, Bob.
Okay.
Good to have you back, buddy.
Yep. Thank you.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.